Okay, traders, on to Fibonacci. Now, I'm just going to introduce the concept of the fib, okay, and also introduce the Fibonacci ratio. So, basically what I've done is I've just pulled up a few websites. This is one of those on Google, and I'm just going to introduce the Fibonacci ratio. So many people out there, they will understand a little about Fibonacci and how it works in the market, but they don't really know the true gist of where the actual Fibonacci sequence is derived from. So the Fibonacci sequence, as you can see here on the first page, on page 115 of Fibonacci, I have put one or two paragraphs in here just to briefly give a short description of what exactly Fibonacci is, where it's derived from, and that it's not something that's completely driven and derived from the market in itself. So the Fibonacci sequence, as you can see here, okay, is 0, 1, 1, 2, 3, 5, 8, 13. And all we have to do to get the next number is add 2 together. So 1 add 1 is 2, 1 add 2 is 3, 3 add 2 is 5, and so forth. So 18 add 13, we're looking at 21. So it's a number sequence which is infinite in nature. Now, there's various elements of the Fibonacci tool, which I'm going to go into in a moment on the charts. And we use a tool called the Fibonacci retracement. So let me just go back to the website. So the Fibonacci sequence is found everywhere in nature. It's quite an astonishing piece of information, actually. Many people call it the blueprint of the universe, or God, so to speak, as a metaphorical term. And as you can see, this shell here, so we're starting at 0 point. 1 add 1 is 2, 2 add 1 is 3, 3 add 2 is 5, and as you can see, it spirals out in this fashion with a number sequence, okay? So it's infinite. It's an infinite spiral that continues and continues and continues. And we can see this in various parts of nature. So obviously we have the shell, we have this thunderstorm going on here, okay? We have the nature and the sequence shown and the spiral form, like a number 9 in this galaxy picture here. Here is the Fibonacci, okay? This is the guy who founded it. He didn't create it, he just founded it. You can go and search Leonardo. It's actually in the book here, Leonardo Pisano. You can do your own research on this, but it's really, really deep information that will allow you to appreciate as to why the actual number sequence works in the market, and the number sequence that we use in the market to spot out trades and get an overall direction. So everything is actually connected, whether people like to believe it or not, in the universe. No one is separated. So common is a Fibonacci sequence. Got cell division. Okay, there's loads of stuff going on. So this is just one website, but you can go through and find it for yourself. How broccoli, for instance, you've got some aloe vera over here, pine cones, flowers, whatever this is, millipede. And as you can see, everything is spiraled in nature. Even from the fetus at birth, it spirals out in the womb. So nothing is by accident in this reality that we are now living, and it's just very interesting information for people to go and research in themselves to actually understand the Fibonacci sequence and the golden ratio in general, because not many traders or people who are learning the market actually really understand and understand what Fibonacci really is, and how vital it is, not just in the market, but it can take you on a whole new direction in actually discovering yourself, your inner self, and actually nature as well. So this is just one of the websites. All I did here was type in Fibonacci in nature, and it brought up this site. So that's that. So let me just close that down. Now, currently, I've got this Fibonacci on the chart, and in the AstroFX book as well, I've laid it out quite well, to be honest, with some bullish and bearish examples. And for those guys who may have been in the market for a while and they have just took the AstroFX course, or the people from the non-UK and the overseas students may have known about Fibonacci and may have read about it online and so on, but The Fibonacci ratios that we use in the Fibonacci tool, which I'm going to go through in the whole of this section and give examples. And there's going to be some trade setups at the end of the online course as well, where you can actually see Fibonacci in play on a realistic and real-time level. Okay, so that's the sequence. What else is important is this number here. Okay, this number here, which derives from this number here. So 1.618. Now, 1.618, 161.8 or 61.8, these are key Fibonacci ratios that we're going to be using on the chart. So here, 61.8 there, and we also have this one here as well. Put it at 61, but it is actually 161.8%. I'll get into that shortly. So going back to, the book. Right, so no matter how far along the sequence goes, even if we got up to into the millions and millions and millions, the 1.618 is called the golden ratio, the golden mean ratio, the golden average, is because no matter how far along you go in the sequence, if you divide one number by the previous number, you're going to get a number relatively near to this. So 13 divided by 8 equals 1.625. 21 divided by 13 equals 1.615. And you can go and try this out for yourselves, guys. You're going to get a number relative to the mean average of all of these, okay? Obviously, it's an infinite number sequence, but this is just the golden ratio, the mean average. So that's the importance of one of the retracement levels and target levels we're going to be using on the Fibonacci tool. So, Fib, Trading View, if I can just pull this over. So on Trading View, I've already explained how to set up the Fibonacci in the first video. And you're going to be hitting the drop-down menu here, and the only one we're using out of all of these going forward, the only one you actually need, is Fib retracement. Okay, you can favorite that, you can star it, you can do whatever. But that's the only one we're using out of all of these tools here. So as you can see, we have Fib speed, resistance fan, Fib time zone, trend-based Fib time, Fib circles, Fib spiral, Fib, all of this. Me personally, throughout my journey, I've had a play on a few of those, but it's really, really hard, especially when you're trying to learn online or from various sources, what a solid Fib is. And you need a Fibonacci, okay, in order to get the highest probability trade setups and overall market direction, because the market does respect Fib. But what I'm trying to say here is that you need some Fibonacci levels and an understanding of Fib and how to apply the Fibonacci and even what time frames to apply the Fibonacci on, which is going to be consistent throughout. So many people out there use different levels because with Fibonacci, okay, so I've got the Fib tool on here, so if I can just click it and then I can click Format. So if you go to Format, you can see that you can put any level in you wish. I've already programmed mine, and I have indeed, I've already gone through it on how to do this and the color schemes and so on, and we want it clean, simple and straightforward. I've been using this Fibonacci personally for 4 years straight. Every single Technical Tuesdays on YouTube, every single trade setup I do, I would say 95%, there's always a Fibonacci involved on one of the time frames, even if I don't display it. So we can use Fibonacci on bigger time frames, such as weekly and the daily, to get the overall direction. And you'll understand all of this by the time you finish Fibonacci. And we can use it on smaller time frames, such as this 2 hour right in front of me now, which I'm about to explain, to actually sniper, okay, some, I wouldn't say intraday trades, but maybe some intra-week trades, especially on this time frame, in line with the overall predicted trend direction. So all of this has already been explained on the first video, so hopefully everybody's on the same page on TradingView. Now, people use different Fibonacci, okay, retracement levels. They might put the 27 in there. Me personally, I've never really used the 27. All of these have meaning. So the Fib in itself, so that's the Fib. And again here, there's a couple decent levels in the book and pointers of information in which you need to read through. So this is just an introduction into the Fib. Got some bullish and bearish Fib examples there, but we don't need to worry about any of that for now. Now, this is GBP USD. This is a 2 hour time frame, and this is the current live chart. All right, it's Tuesday afternoon. And I've just put the fib on here. So when you actually click fib, if I'll just show you how it works. So I'll click the fib tool, and then you can click somewhere, and there you go. So the 100%, which you can see at the bottom, the 100 just here, that is going to be your first point of connection to a significant low, or a higher low, or a lower swing high. And what we would then want to do, as you can see, we can move it around. For a bullish example, you want to pull it diagonally to the up and right. And as you can see, the Fibonacci retracement levels 1, 2, 3, and 4, they actually display the current price on there as well. And you want to click the 0 level at the top of wherever you think a significant high is. So in this case, it should look something like this. Let's just say this was a piece of price action, and we want to snip it right onto the bottom wick, onto the high wick, or wherever we can line the 0 up. Maybe this may be like an area of resistance, this may be an area of support. What we're expecting the market to do is now pull back, hit one of the 3 levels, and then rebound. We can only use a Fibonacci in a trending market, by the way, guys. We don't really want to use Fibonacci or play with Fibonacci in a consolidating market, a market which is sideways. We've already had a little bit of a play around with the fib using the 50% there, because all the 50% is, so once we have found our first point, 100%, and then we dragged it onto our top point, which is 0%, just like we did with the monthly ranges. So let me just give you a quick recap of that. So the monthly ranges would have looked obviously something like this. You've got the resistance there, and then you have the support here. And then what you're then going to do, obviously I've already gone through these videos, but you're looking at finding 50%. So the 50% level is just halfway between the 100 and the 0. Easy as that. The 38.2 and the 61.8, so let me put it like this. Let's say the wave from bottom to top there, let's say this was, just for the example, 100 pips. 100 pips from top to bottom. Now, obviously, if the market bounces back down to the 50% level, it has retraced 50 pips. That's the 50% now. I'm just going to remove this line. That's 50 pips. Whoops. Okay, if the market manages to bounce back down to the 61.8, let's just say it came down 62 pips. Now, alternatively, if it comes down to the 38.2, let's just say it came down 39 pips. So as you can see right here, these are just projections of where the market can maybe have a breather to before potentially returning and continuing in its overall direction. So A, B, C, D. I'll get to that in a moment. The fib we use is A, B, C, D. The 2 levels over here, now this is the 127%. Okay, and then the one above is 1.8%. Right there. So we have potential areas. We use this for another purpose. We can use this for our stop loss placement, like 10 pips behind here or 15 pips behind here. I'll get to that later on, so don't worry about that right now. So let's say the market rallied from this zone. It went up 100 pips, pulled back. It's either going to come down 38.2 or 39 pips, 50 pips or 62 pips. And then potentially rebound in the overall bullish direction in this case, and maybe tap 127 or 161.8. So it's like a zigzag. And remember that this could be a higher high. This could be a new higher low. And then up here, it is projecting where the new higher high could be. So that formation makes sense, right? So we have significant low, might be a reversal at support, It's gone up 100 pips, made a new higher high in the formation. It's pulled back a little bit to make a new higher low, either here, here, or here. And then it's gone up to make a new higher high, and then potentially could come back down to make a new higher low, higher high, and so on. So that's what the Fibonacci is, more or less in a nutshell. Okay, so that's that. Now, over here is an example that I was looking at myself on the GBP USD. However, I missed the best entry to buy. So the Fibonacci, what we're going to be looking at is A, B, C, and D. A, B, C, and D. So let me just put that somewhere. A, B, C, D, which is a zigzag formation. People use various Fibonacci's, I've already mentioned. They use different levels. They can use different levels up here, and they could maybe sell when we're actually getting out the trade and so forth. Different charting patterns that they use, that's completely up to them. This is the Astro FX way, and we've used this for, as I say, 4 years now, this Fibonacci. Right, people do know a little bit about Fibonacci here and there, but it's really understanding how to place it, which we're going to get to soon, but I just want to cover the basics so everyone's on the same page. So we have the Fib A, which is a significant low, which could be a reversal formation, a candlestick formation at a level of support. The market has then rallied up, and then for this example, I've used this point as my significant high, so I've got A and B. This is probably an A, B, C, D as well, but I'm using this bigger example just to give people clarity. And then you can see the C retracement, this is at the 50%, so it's going to be one of 3. So as you can see here, if I just zoom right in there, look at the accuracy on how the market has held above the 50% retracement. Right there. 1, 2, 3, and then boom, it's continued to the upside. So this is a 50% retracement example. Okay, now what then is likely to happen, and this is more or less a probability basis, I would say 75% myself, we will hit our first target point, which is D. So we've got A, B, C, and D. So it's again the zigzag formation. A to B, we pull back, we've made the C retracement at 50, and then boom, we've hit our target point. Now, it's really good, and it's really satisfying when the Fibonacci actually comes through, but it's even more satisfying when you place your Fibonacci on. Remember, we probably won't see any of this price action, so it's all about getting the A and B correct and awaiting the market to pull back and show us some kind of reversal around the 50% or 61 or 38. And then we can say, oh cool, I know there's a 75 to 80% chance that we are going to hit our first target point. Now, we do have 2 target points, which is the 127, which I programmed minus 27 because that's the way I had to do it with this tool on TradingView. And then we have the 161.8, which is marked on as the 61.8 over there. Okay, so that is a potential for, as you can see here, we spiked and we've smashed straight through and just bounced back off our first target. If this is broken, then we can maybe expect target 2. But what we want to do, when we are looking at confluences and so on, we want to actually align the Fibonacci with maybe some of our key levels. Remember, we've already done key levels, we've already done trend lines, and we've already marked out our higher high points, higher low points. So this is why I'm doing the course in such a manner, whereas we're starting from scratch, we put our foundations on, we then highlight the swing highs, swing lows, and we've already gone through how to do that. Then we place our trend lines on to assist us in the overall direction on various time frames, and then we can go into Fibonacci. So this Fibonacci is a complete Fibonacci, A, B, C, D, and what can actually happen now, potentially this GBP USD can see this as resistance and pull back, perhaps, or it can break it and then land or end up at the next Fib extension level, so A, B, C, D. Euro USD, I had this trade is currently active and it's going to be at the end of the members area. Now I've seen this the significant high over here, which was triggered from FOMC, and I've took the fib from A down to B, so I'll just redraw it. So obviously this example is a bullish example, so I'm going from bottom to top, But in a bearish scenario, I'm going from top to bottom. So top to bottom will be A down to B. Now I can place it on the wick, or I can add it, just place it onto the support level there, because as you can see, we have all of these wicks coming through, but we haven't actually closed below our daily support. And again, the daily support was already drawn on. So when you have all of these elements drawn on and you can actually read the market, then everything else falls into place and becomes a lot easier. So what we can see here, we have A, B, the market's retraced and pulled back through, and again it spiked straight through the 50%, so I would consider that as a 50% retracement, or even a 38.2, because as you can see, none of these candlesticks after the pullback could actually sustain and hold above the 38.2. So let's just say A, B, C retracement 38.2, and then there's my first target there. So I'm expecting something like this to happen on the Euro USD at the moment. And then boom, there's a potential for Euro USD to make new lows down to the -27. That's where I put my target there. This actual trade is a 1 to 1.6 risk reward. And let's go back there. A 1 to 1.6 risk reward. And it's something that I've been watching for a day now, okay, a day only. This is a 4-hour fib. I've already read the overall direction of the trend, and it is bearish on the Euro USD at the moment. So we always want to go in the direction of the trend, and the market's always going to provide us with Fibonacci opportunities. So that's an introduction into the fib. We're more or less projecting a very accurate lower high here down to the next lower low. So lower high to lower low in a bearish example, and then here it was the higher low up to a higher high in the bullish example. So that's fib. You can go and research the sequence. You can research how Fibonacci appears in nature, and now we're relating it to the chart. So it is some special stuff, as long as we can actually plot it onto the graph correctly and so forth. So that's what you're going to learn in the next few videos.